Hello everyone. Investrance research is back again. The motive of Investrance research is basically to get people who are not into stock market and to start from their basics to make them to a professional trader for investment purposes. And also the people who are into stock market and are not really doing a professional kind of trading. The motive is to make everyone a professional trader here. So uh, today, taking the first topic of the basic webinar, why you should invest in stock market. So there has been a lot of buff in in Indian industries that where means people, a lot of people keep on talking that where they should invest their money, right? There are a lot of financial instruments available in the market, in the Indian market, and which is being marketed by people, a lot of people, banks, let it be your financial planner, mutual fund seller, life insurance seller. A lot of people will be giving you advices on where to invest. But the basic psychology becomes in Indian market is their money safe? Is their money protected? What will happen when the contingency takes place at their end? So uh, beating all this things and beating all this psychological thinking about investments in stock market, considering it as like uh, people do lose a lot of money in stock market, but there is a professional way of investing into stock market which will give you better returns, protected returns. And we in Investrance Research has developed a system of professional trading in such a way that your capital is protected, is safe. The main motive of Investrance Research and the main motive of every person should here be protecting their capital. So stock market can, if traded professionally, by learning, by not taking not taking stock market as a gambling spot and investing professionally by analysis, professionally looking at companies, having a good approach to a stock market, one can make huge amount of money in stock market, and it could prove out to be the best investment for an individual. So coming to the one of the major buff in the Indian market, that what instruments you should select to invest your money. So the very first investment, the bonds, which are considered to be safe. Okay, see, they are considered to be safe. You trade government bonds, FDs, fixed deposits in the bank, PF, bank deposits. That means your savings account, which gives you 4 to 6% of returns, and PF to FD to bonds can give you 8% of returns maximum. Which is quite safe. But the disadvantage of this kind of investment is that the value of your money is not the same when you invest. Suppose you are investing 1 lakh rupees in 2017, though it will increase the amount you have invested by 8% every year till 2020, but the value of that money won't be the same. The reason being, we are always hit by inflations. Inflation is a factor. One of the factor means all the commodities, whatever you are buying. Suppose say you are buying petrol today at 70 rupees per liter, but in 2020 you will be buying it at rupees 120 rupees per liter. So that means that the price of other commodities which you were buying at the same value of 1 lakh, in 2020 you will be buying the same value of goods in 1,50,000 maybe. So it might appreciate by 50%, but your investments has appreciated only by say 20%, beating the inflation. So it doesn't really give you a good return, I can say. Coming to real estate, a lot of people do think that real estate is a good investment. Uh, I can say that it was a good investment in 2003 till the stock markets crashed and we had all the economic booms. The market looks quite saturated right now. If you go to the places, check out real estate prices of lot of places, good places. It's quite saturated and it's constant past so many years. So it's not really turning out to be a good investment, but people do invest. Indian market, Indian people wants to have an home. But if you invest in stock market from the right time, you can also fulfill your dream of having a home. Gold again is very very variable, but you can trade gold in stock market. But if you are holding gold, it's risky. Suppose suddenly uh, oil and gold are quite correlated commodities, which you can check it out further one of my webinar. So it's quite correlated. You can imagine the price of gold going up, but you can also imagine the price of gold going down. So if you are physically holding some gold, I'm not talking about you if you are holding gold electronically, because you can sell it anytime. If it is going down, if it is going up, you can make money. But if you are physically holding so much gold, and if you are not investing that money and suddenly the prices drop, your physical gold will not have the value as you expected. The another instrument, mutual funds, are lot of people do invest in mutual funds first for tax saving purposes, for investment, for their future goals. Let me tell you, the stocks which you select is not selected by you, is selected by portfolio managers of the companies who run those mutual funds. So it, you can say it's diversified at that point of time, but its value can go down. It's not controlled by you, it's controlled by portfolio managers. If it's the mutual funds, if open ended, if close ended, you are investing in it, you are locked into it when you are investing it for tax saving purposes. Coming to stock market is as I said, it's risky, but if traded professionally, learned, analyzed, and you make a mechanical system, have a calculated approach of investing, then you can make hell lot of money out of stock market. So why you should invest in stock market is, as I said, if you are investing in, say, FDs, savings account, PF, everything, you can your value of investment will be low because inflation will be taking place. So and again, if you want to have some financial planning in life, stock market is the best thing that you can invest in. Making plans. Suppose a guy who is 30 years of age has a financial plan that he is going to go 10 years down the line, 5 years down the line, he is going to have a kid. 20 years down the line, he needs money for his child's education. 25 years down the line, he has an goal of getting his son or daughter married. And 630 years down the line, he has a financial plan of retiring himself. Also included, he has a financial goal of having a house, having a car. So if the calculated amount of money is being invested in stock market at right point of time, like SIP, systematic investment plan, but the SIP and all these stocks which you are buying should be analyzed by you. We in Investrance develop people to make their own financial plan, make their own trades, how they can analyze their trades, analyze their stocks which are going to go very up, because you can't imagine what stock market can give you return 10 years down the line, 20 years down the line, and 30 years down the line. If you are just investing 5,000 per month, can turn into crores 30,000 30 years down the line. Okay, so it helps in your financial planning. And if someone wants to retire say like I have a plan of retiring a few years down the line, so I am learning stock market a lot. So it makes your own boss. It You can make your own money here. So it can be very safe if you just learn how to trade in stock market. So please, there are a lot of advantages by investing in stock market. So let me give you an example of few stocks that has given good returns. So if you can see the price of MRF, if 742 rupees invested in 2001 in MRF, in 2017 the price of that particular stock became 62,000 rupees, giving a return of 8,355%. No one can imagine, no one can get this return from and from an instrument which is giving safe returns. And also Ultratech Cement, if 267 rupees invested in 2004 turned out to be 4,000 rupees in 2017, giving 1500% return. So this is the magic of stock market. It gives you Investrance gives you a good stock selection strategy, how you can select such stocks which are going to be so big 30 years down the line. So if you just plan to invest, if you are 30 years of age and if you plan to invest for your retirement portfolio, and if you select such stocks, it will beat your PF, NPF to the biggest level you can't imagine. So this is how stock market is beneficial for an individual. So here also stock market has IPOs which has given a good returns. You can see the companies which gets listed on say Bombay Stock Exchange or National Stock Exchange. So such this is also an financial instruments. You can see the IPO, the recent blockbuster IPO of DMart, which has given a return of 150%, 144.70% return. So once invested, this money can double, or I'm not making a bluff, and I don't want to bluff that every stock can give you such returns. But yeah, the precautionary measure and everything, a cautionary note, you can say anything, is that until and unless you have a calculated approach for this particular thing, stock market, you are going to just gamble. If you want to be a professional trader, stick to this webinar, stick to this Investrance research, ask your queries, because we will be coming of a lot of uh, investment ideas, how to analyze stocks, how to select stocks, how to study a lot of stock market, because stock market is quite live, and everything and single thing affects the stock market to a greater extent. So you have to be calculated, you have to protect your capital, you have to be more focusing on risk than making profit. Profit making should be 30% than, but protecting your capital, uh, focus on protecting your capital should be 70%. So stock market is a very, very good instrument to invest. If you have not started investing, it's never too late, because stock market keeps on giving opportunities, because there are a hell lot of stocks in market. No stock is good or bad. I can say the only stock is good which is going to give me money. So there are a lot of ideologies. If you have any query, any doubt regarding why you should invest in stock market, or if you're not ready, what are your psychological thoughts about stock market, you can obviously reach out to me on anything. Facebook, you can follow us on Facebook, Investrance research page. You can subscribe to this YouTube channel for to follow the videos, or you can write down the query to me on investranceresearch@gmail.com. Please do like, share, comment, and subscribe to this video, and please share it with your friends who haven't started investing in stock market but are ready to do so. And please get back to us. Our team is of professionals who are working on all the parameters for your investments. So thanks a lot for watching this video. Please do like, share, comment, and subscribe. Thank you.